Hey everyone, I'm going to use this video real quick to demonstrate to you the rule of 72, which is an equation that effectively says if you divide 72 by a whole number growth rate, you can figure out how many periods, whether that be years, months, or days, depending on how you're measuring things, how many periods it would take for that data that you're looking at, if it's growing at that rate, to double. So we're going to look at this with our hypothetical economy. And first, I'm going to generate a source of economic growth so we can have some growth rates here. I'm going to create a situation where our economy in its next period grows its capital by about $500 billion, so that when we go back to this economic growth tab, what you're going to see is a situation where, yes, the economy in its base period has a potential output of $18.9 trillion and grows by around 59.27% for every period thereafter. That growth rate is something we would call exponential. It's exponential because it is growing at a steady rate, right? Exponential doesn't mean it's growing at the same amount each time. It means that the rate of growth is the same. And you can see that graphically, this exponential growth creates a steepening upward trend. I also have a pessimistic forecast here that is a few percentages lower for the base year. For the year after the base year for the growth, and then follows the growth rate in every other year. This is to show you the importance of the idea of exponential growth, right? Just by having the second year be a smaller jump off point, a smaller rate of growth than in our normal scenario, even having every year after that grow at the same rate, by 2024, we end up with potential GDP that is at least close to like $20 trillion smaller. This is why pursuing aggressive, or this is one of the main reasons suggested for pursuing economic growth aggressively from the beginning, the onset of an economy's development. As you can see, our Rule 72 looks at the growth rate, and in this formula, looks at the growth rate and multiplies that growth rate by 100 so that it's a whole number, and then divides 72 by that whole number, implying that for our economy growing at 59.2% each year, it's going to double every roughly year and a half or year and a quarter. And you can see that basically happens, going from 18.9 trillion to 30.1 trillion to 48 trillion to 76 trillion. So it's a very simple, short rule to show that the doubling of a piece of data or a series of data is dependent upon a couple of things, right? The growth rate being exponential is one thing, so having growth maintain itself each year at the same rate, but also that the growth starts off aggressive and strong from the get-go, because even modest weaknesses, variances at the beginning of the growth can dramatically change the trajectory of an economy.